We are back with David Sekera. He's Chief U.S. Market Strategist at Morningstar for a further discussion of the big event of the day, David, and also some buys and some sells you've got in the current market. First of all, let's talk about the Fed. What do you expect to hear from the Fed? How much articulation might you expect to hear on the potential for U.S. trade policy to introduce inflation into the U.S. economy?
Yeah, so we're not expecting any change to the Fed funds rate, this meeting. Personally, I think this is going to be a relatively boring, mostly uneventful press conference. I don't expect to hear anything from Chair Powell during the press conference, as far as really getting into what the Fed is going to be expecting, from the potential tariff negotiations, going forward. One thing about Chair Powell, he's always been very good in the past of providing what I consider to be, non-answers to questions, when he's asked. So in this case, I think he's going to get asked a lot of questions about the potential for tariffs, but I think he's going to just fall back to his typical, talking points that the Fed will monitor the situation as it develops, and they will make, monetary actions, that they think are consistent with their dual mandate of maintaining price stability and maximizing sustainable employment. So again, I don't think we're going to learn, anything new, this time around. I think he's going to try and be especially as non-political, as he can be, in this case. Now, looking forward, our U.S. economics team does expect inflation will continue to moderate over the course of this year. We saw some good numbers from CPI and PPI earlier this month. Having said that, we do expect the rate of economic growth will slow sequentially over the next 3 quarters. So we're not expecting a recession, but looking for the rate of growth to slow. So we do think the combination of moderating inflation, slowing rate of growth does allow the Fed to start cutting again, most likely at the May meeting. We are looking for 3 cuts over the course of this year.
Okay, let's move on to some of your stock picks. You've got, and I'm going to start with one of your very prominent sells. This one rivals your gold prediction in terms of being an outlier. Walmart is the stock. It is loved almost as much as bullion is by investors and analysts. There are currently 45 analysts who cover Walmart. 42 say buy. You say sell. Tell us why you think this stock has peaked.
Yeah, it's a 1-star rated stock, trades at a 50% premium to our $58 fair value. And when you look at the valuation of the stock, we think it's just way too high for our long-term growth expectations. So in the short term, yes, Walmart has been doing, phenomenal. It's seen, great earnings growth. But a lot of that is a combination of a couple things. So one, we did have, pretty high inflation in the U.S. over the past 2 years. And a lot of low-income and middle-income households are still under a lot of pressure from that inflation as wage growth in those demographics failed to keep up with inflation. So we're seeing a lot of new foot traffic going into Walmart, a lot of middle-income households, trading down to Walmart, getting away from traditional supermarkets. But we think the market is just over-extrapolating that growth too far into the future. Again, just an example of how overvalued we think it is. I would note that Walmart trades at 34 times our 2025, earnings estimate. And looking at our model, we are forecasting 4% top line growth. We're looking for margin expansion over the next couple of years. In fact, getting to new highs with their margin. Yet that stock is still significantly overvalued. And then taking a look at their guidance for this year, I know it disappointed the market. We did see the market sell off a little bit after that guidance came out. So that to me might be indicating a lot of people are also thinking this might be the peak for Walmart stock.
Okay, another one you say sell on, also much loved by analysts who covered United Airlines. It's lost a lot of value so far this year, and you think there's more to come here. You also say sell on United Airlines.
Yeah, another 1-star rated stock, trades at over an 80% premium to our $39 fair value. And again, this is one where, pretty much every tailwind has been going in the right direction, for the airlines. You've had, all the pent-up demand, from the pandemic, which has been running through the system for the past couple of years. You've had energy costs, coming down, which has helped their margins. But, unfortunately, when you think about the airlines, it's just a no economic mode industry. We don't see any airline having long-term durable competitive advantages